Hello and welcome to this special interview from the Tax Sutra conference. I'm joined by Mr. P.R. Ramesh, Gautam Doshi and Rohit Gupta as we talk about India Inc.'s challenges as it transitions to Ind AS and ICDS. Gentlemen, appreciate you joining us here. Very quickly, I'm going to ask each of you to give us the top 5 issues that you believe the government needs to address when it comes to this transition that we're speaking of. Mr. Ramesh, I'm going to start with you. The top 5 things that you want the government to address.
Okay. There are 3 broad issues. One is a ambiguity issue where we need clarifications. The second is an issue of business disruption which we need to address, and third is an issue of taxation. Specifically, I would want government to the top 5. First is do away with ICDS. The second is deal with the issue of MAT or clarity around MAT. And the third is ensure that there is a mechanism to avoid double taxation, and fourth is provide a forum whereby the clarity can be sought and obtained rather than through a process of assessments and then thereafter you're stuck with a certain position and you need to go to the courts. Even these 4 I think would go a long way to deal with this.
Okay, so there is no 5th there then?
Oh well, if you wish, there is a 5th, and the 5th is, I think the government needs to reconsider, which is not so much a tax as much as a rollout issue. Insurance sector is one sector which they have clubbed with the banking sector, and the insurance standard will be ready in 2020 only, not earlier in terms of application.
Okay.
And so there is a mismatch in the insurance sector which they need to address.
So Mr. Doshi, your wish list, doing away with ICDS, would that top the list as well?
Yes, one of them certainly. I'm not sure it's the top of the list. I would consider Ind AS as creating more disruptions than ICDS. And on Ind AS, right from the beginning, one of the points we had been making was don't apply it to standalone balance sheets. Ind AS is the purpose is disclosure, purpose is to give fair information. Apply it to the consolidated balance sheets, which are not statutory balance sheets. It would do away with 80% of the disruptions which are coming up, because then you would not really have a problem with banks or with others, because normal balance sheets would all continue to have the normal gap, and those who want to know the full facts will get it in the consolidated balance sheet.
Okay.
And the whole world by and large adopts this model. Most of the developed countries apply Ind AS or IFRS only to the consolidated balance sheets, not to the standalone balance sheets. India is one of the first countries to do that, and I don't really see why we are doing it.
Okay, so that's one of the issues.
Correct. When it comes to ICDS, I think yes, really it is not serving any purpose, because again, if you accept that the tax law overrules ICDS, then today I think the judiciary and the judicial background is sufficiently well set that one knows how to compute income. There are not really so many disputes on that. Current disputes on tax are all on M&A, international tax, transfer pricing, but in respect of local tax, depreciation, interest, etc., the disputes are perhaps 10% of what they used to be or even lesser. I can't see any reason to disrupt that once again by introducing an ICDS and introducing totally new rules for that. So that's the second one. Now, assuming these 2 are not going to happen, that we don't have Ind AS going away for standalone
and we have ICDS
stay on, then you have to look at other alternatives and solutions. And there we need on Ind AS more clarity, clearly, and perhaps a general proposition in the law equivalent to elsewhere that any changes made because of Ind AS automatically overrule all other contracts, laws or provisions, and therefore you don't need to go and renegotiate every agreement or every particular contract. They are automatically deemed to be overruled to that extent, or whatever are the amendments required.
Okay.
Or each regulator should be required to deal with that separately. So that's as far as the Ind AS part is concerned. As far as ICDS is concerned, I think what they need to clarify is they are not really trying to tax income which otherwise would not have accrued. Income which is otherwise not considered to have accrued. They don't really want to tax that. The purpose of ICDS is only to clarify computation provisions so that it becomes simple for both the tax officer and the assessee. And if they were to clarify that, and that therefore all these are rules, but these rules are subject to the current judicial principles, then I think we should not really have the same amount of difficulty on ICDS which we are facing.
Okay, Rohit, at this point in time, CFOs feeling the heat?
Absolutely, CFOs are feeling the heat. And I would say from our perspective, the top 5 are simplification, which means ease of doing business, Secondly, speed is of essence. Alignment of the ICDS to the accounting standards. There should be no double taxation from an industry point of view, and there should be enough time given to the corporates to adjust to all these regulatory changes. If they are coming in far too late and they have to be implemented by a certain timeline, let's not forget even GST is on the annual.
Yes.
It doesn't give us enough time to plan. So as long as, I would agree to Ramesh's point that can we do away with ICDS if it is actually not helping at all. We have NDS, we have the current form of taxation which is already in place. So why add to this complexity? So as a CFO, I would rather, it will help if my life is made simpler by at least one regulation going off.
That's right. So let me then ask all of you, all things remaining equal, as Mr. Doshi said, no changes to Ind AS, stays as is, no changes to ICDS, stays as is. How different will balance sheets look for India Inc.?
Ind AS itself will dramatically transform balance sheets in India depending on which sector in which you are operating. And as you know, in accounting, when you recognize new numbers, you also recognize the tax effect of those numbers, irrespective of whether the tax is paid today or paid later. So the tax numbers also in the financial statements will get dramatically impacted. A third dimension, because of the issues of MAT, where we are awaiting clarity, is there could be cash outflows which could be significantly different from what they are under the old framework.
Mr. Doshi?
Well, our preliminary workings show that in almost most of the companies, the impact on net worth, the net impact may not be so huge because we are trying, but the direct impact on the, say, the asset side, the increase and the decrease, each is at least 10 to 20%. So you are talking about net worth first going up by between 10 and 20% and then coming down.
Right.
And to an extent, let's put it that way, one is working hard to make sure that the net impact is reduced. But otherwise, you are talking about a huge impact. At the minimum, you are talking about 10-20% impact of the top 500 or 1,000 companies of the country. And that's a huge impact which is going to be perceived on those balance sheets as they come out.
Right. So, Rohit, let me then end by asking you, in terms of decision making now, given the uncertainty and the lack of clarity on a lot of these issues, how is that hampering or holding back decision making in the boardroom?
See, well, we're not really holding back, but we are being conscious.
But it's impacting planning, isn't it?
But it is impacting planning. It is, we're making conscious decisions, specifically when it comes to large investments, and it is in effect affecting our net working capital requirements. So cash flow planning is affected, impact of Ind AS on large contracts. How is it going to be recognized from a revenue recognition perspective and the bottom line? There are implications which are there. I would say as soon as the clarity comes in, it's easier for us to take decisions. So that's why I keep saying, speed is of essence, because we will be able to take far better decision making, if the clarifications are faster.
Well, we're hoping that the government is listening and that we will see clarifications coming in. And as our panelists have pointed out, that at this point in time, there is more pain, and we're hoping that some of these clarifications will alleviate some of that. Gentlemen, appreciate you joining us here. With that, it's time to wrap up.